Hello, I'm Simon Henry, the Chief Financial Officer of Royal Dutch Shell. Today we announced our quarterly financial results, so let me give you some of the highlights. Our first quarter 2013 earnings were $7.5 billion on a clean current cost of supplies basis, and our earnings per share increased by 2% from the first quarter of 2012. On a Q1 to Q1 basis, we saw lower earnings in the upstream and higher figures in the downstream. Our upstream underlying earnings were $5.7 billion, and that's a decrease of 10% versus the same quarter in 2012. Our growth projects had a positive impact on the Q1 to Q1 comparison, and there was some uplift from higher gas prices. But this was more than offset by lower oil prices and higher operating costs, depreciation and exploration expenditure. Our downstream earnings were $1.8 billion. That's higher than year-ago levels, with improved earnings in both oil products and in chemicals. Our underlying oil and gas production, excluding asset sales, exits and oil price impacts, they increased by 2%. Now, the volumes were supported by growth from our Pearl gas to liquids project in Qatar, from North American liquids-rich shales production, and the Pluto LNG project in Australia. Now, Shell is investing for growth while maintaining strong capital discipline. During the quarter, we recommenced production at the Port Arthur crude expansion project in Texas, and we started up two key projects, an enhanced oil recovery project in Oman and the first of our oil sands debottlenecking projects in Canada. There were also 4 new final investment decisions during the quarter. They were in deep water in Nigeria, 2 LNG for transport projects in North America, and also in petrochemicals in Singapore. We also added new exploration acreage worldwide, and we found new gas reserves in Australia. Now, dividends are Shell's main route for returning cash to shareholders. The first quarter 2000 dividend is increasing by 5%. But our improving cash flow also enables us to accelerate our share buyback program. Now, this year, so far, we have repurchased over $1.2 billion of shares, and that's by the end of April. In the current environment, we would expect to more than offset the scrip dividend issue this year, and we are determined to implement the policy to offset dilution over the full business cycle. And this underlines our commitment to shareholder returns. Thank you for listening.